Are you gonna record it?
Yeah, it's on the tube.
Oh, okay.
I got it on the tube. It's gonna be on the tube. I'm trying to decide if I'm gonna leave it up or just make it available for just the members only.
Mm.
I'll probably just leave it up the whole time. I'll just leave it up, but it's gonna be on YouTube.
Oh.
Yeah, I guess I can do this since it's already up and we talking. And I still got the mic on, so everybody can hear me talking right. Can y'all hear me talking right now on YouTube? They should be able to hear me talking right now on YouTube. I don't know. They can. Can y'all hear me talking right now on YouTube, or do y'all only hear the music?
Let me see.
Can y'all hear me?
I'm gonna go check it out.
Yeah. Let me see. I want to know that. So I want to see. Cause sometimes I be, we hear you. Okay, yeah, they can hear it. That's what I thought. Cause it be playing the music, and that's why I usually have the mic muted when I have the stream starting soon thing. When I have the stream. Yeah, I can hear this echo. All right. Since y'all can hear me, let's go ahead and get right into it. Oh yeah, I forgot to do that. Yeah, there you go. Now we got that covered. What's happening, man? Good morning, y'all. I ain't gonna be in front of you long. Y'all know what happened. Whenever I say I ain't gonna be in front of you long, y'all know what happened. People
go crazy.
Man, go crazy. If you in the Discord, go ahead and pull up in the Discord, cause y'all know we sprinting now. So I might just want to jump into some class participation. You know what I'm saying? So, you know, we doing this cause we to the point where we, you know what I'm saying, it's like we sprinting. We ain't shucking and jiving. We trying to figure out how to apply this stuff. We trying to figure out how to apply this stuff so that we can you know what I'm saying, change the trajectory of our family's future. You know what I'm saying? So we go, oh, hold on, let me back up and do this since we public. Good morning. If this, hold on. Let me get myself together. Y'all can tell I'm so out of practice with like live streaming every day. I used to have a whole little routine that I went through. You know what I'm saying? I ain't got no time to be trying to be no full-time YouTuber, man, because I just do stuff on the whim. Good morning. If this is first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning into Tim's Tidbits, I still want to say welcome. And give you a nice hearty well thank you for always being a part of Tim's Tidbits. If by some slither of my imagination you don't know who I am, my name is Timothy Lee Rogers Sr. No, I'm not the Amazing Spider-Man. I'm Timothy Lee Rogers Sr., a.k.a. Araña Grande. That's Big Spot if you don't hablo español. And you are in tune to another episode of the Intra-Day Price Action Recap. And we're going to be doing a weekly recap because it's actually Saturday. Good morning, Mike. I mean, the Black Al Davis. I'm sorry. Good morning, the Black Al Davis. Right? We're it's Saturday morning. We didn't get a chance to do it Friday because Friday was the last football game of the season. You know what I'm saying? I'm a father first. And so I'm doing it today. And we're going to recap the entire week. Right? Since it's the end of the week. Now, if you are interested in being a part of the gang, how you get in the Discord is hitting the join button. The join button is for the channel members. People all be like, hey, how do I join your Discord? How much is your The Discord is for the channel members, right? Can you turn on the fancy dancy and make the candle larger? I'm watching from my phone. No, I can't, Valentine. No, I can't. Let me turn up a fancy dancy and make the candles bigger. Okay, but the Discord is for, you know what I was thinking about? I was thinking about doing a part, like a artery and price action part 2. right? But this was going to be a left seat, right seat type of thing, right? And then when I was thinking about what I wanted to do with it, I was like, nah, I can't do that because I'm out to charge for that. I'm out to charge. Now I know, you know what I'm saying? I know the mentorship now got like the $24.99 a month for what we do, but what I was thinking about doing, it was gonna be like a more hands-on, accelerated, we sprinting version of it. Not so much for the gang, cause y'all already, you know what I'm saying? Y'all right there. Y'all right there. And I ain't finna kick the baby. Y'all know I be kicking the baby birds out the nest. Get out. Fly, pelican, fly. I ain't kicking nobody out the nest. I ain't shutting everything down. You know what I'm saying? But for what I was gonna do, I would have to charge for that. And I'm like, nah, cause, you know, because y'all know how I am. I be wanting to help y'all. And when I start feeling like you don't want to help yourself, I be getting pissed. Put a one in the chat if y'all realize how ticked off I be getting when I be feeling like I'm wanting it more than y'all. Y'all see how I be getting? I be like, I'm gonna shut it down. I be passionate about it. I want it more than you. I'm gonna shut it down. Get it from around me. I ain't helping you no more. Hey man, let's get to it, man. Shout out the new members. I don't know if y'all in here. We got a couple new members to the gang. I know Jim Big Bird. That stuck out of my mind. Jim Big Bird. Jim Big Bird. I want to say it was somebody named Ruby. I think it was Ruby. Was it Ruby? Because the YouTube names be different from the Discord names. So if it ain't Ruby, I'm sorry. It's been a few people. Vernon, I think. Vernon. Ruth. That's it. Ruth. It was Ruth. It wasn't Ruby. It was Ruth. Right? Okay. Ruth joined the gang. Ruth out here looking for Ruth. Nah, y'all know that Ruth knew. Ruth don't get my humor, so I ain't gonna start joking yet. People messing it up for people. What's up, Sanjay? I ain't seen you in the month of Sundays. Hey, let's get to it, man. Shout out to new gang members. Right? Shout out to new gang members. Anybody new to the gang, this is not, I know I said I'm fun to get started, but I got to put this out there. Right? This ain't your regular, I got the first two letters. That's it. That's all I get the first and the last. Like when I be reading, I be saying all kind of crap because I look at the beginning and the end, and then But this ain't your regular young people Discord where they be in there all the time and chopping it up and hey, look at this and then what you think about that and this that ain't what this Discord is, right? This Discord gives the channel members, the people that pay the monthly subscriptions through YouTube that I ain't got no control over. YouTube take 30% off the top. You know what I'm saying? They pay that right there. And I said, okay, since y'all paying that, I'm going to make a Discord just for y'all, right? And it's to give you access to me whenever I feel like popping up. Whether it be live on YouTube or just me popping up or me talk, just to give you direct access to me because you paying your hard-earned money to subscribe to the channel membership. And so I'm giving you a Discord, so I'll be like, hey, I'm fun to talk about price. If you want to listen, pull up. That's what the Discord is for, right? We don't be in there going back and forth. I pop in there, I say good morning. I'm going to get back to the class participation, like putting stuff in there. The reason why I ain't been doing a lot of class participation is because we sprinting now. We sprinting. We should be to the point where you don't really need the class participation. We should be to the point where you ready to fly, birdie, fly. You ready to fly away from the nest. I know it's been times when I done thumped the little baby birds out and they said, look, we ain't doing nothing no more. Go out and conquer. But I ain't doing it like that no more. Everybody learn at their own pace. I can't make people learn at my pace. So now, you know what I'm saying? But I'm going to get back to the class participation because we got new members coming in. And the new members, especially if you joined the mentorship. I know somebody joined Black Spiders, but especially anybody, but especially if you joined the mentorship, go watch the mentorship video, the Art of Reading Price Action playlist. Do the homework. So on Wednesday nights, when we pull up with the questions about the homework, you will have questions about the homework. All right. And even if you're not in there, go through the Art of Reading Price Action. I sat down and I put it together in a way, right, over all this experience of trying to express the way I understand ICT concepts. I think the Art of Reading Price Action playlist, that's like up until this point, that's the best playlist to watch if you're trying to learn how to use these ICT concepts. Now, you have to have the verbiage of the ICT concepts understood. So if you don't understand PD arrays, you might want to go back and look at the ICT concepts lingo playlist and then watch the Art of Reading Price Action, because the lingo playlist gonna teach you what the PD arrays are, right? Like that whole ICT concepts playlist, that was good for the time. It's 3 different playlists, right? It was good for the time, but the Art of Reading Price Action, I think that's a little boost, because I got a feeling of how a lot of people in the gang learn, what a lot of people in the gang want to see. And so when I put it together based off of all the questions that I be getting from the gang, and I put it all into one nice little playlist. It's 19 videos. The first one is like the intro to give you some verbiage, but 2 through 19, right? Those are the bread and butter of it, right? So, and that's all on the YouTube channel for free. I just told you, you don't have to join the membership or get into the Discord. It's right there for you, packaged up pretty. But if you do join the membership and get in the Discord, it's just to give you more time with me when I do stuff like this and I pop up. I do stuff like this all the time. I stay popped up. It's a channel in there called I Stay Popped Up. Old people Discord. Yes, we right at home. I'm an old man. I ain't got time for the young. I'm old and petty now. If I look at my wrist and I got time today, I will go back and forth with the best of them. Y'all getting me sidetracked. I'm supposed to be talking about price action. Out here getting me sidetracked. Let me take all this stuff off the chart. Blip. Hide that. Hide that. Okay. Let's go back and talk about what we said prior to this week. Let's put it on weekly candles. Oh, the month ended last week. We had the month to end last week. Let's look at the monthly calendar real quick, because the month ended, right, last week. Can somebody tell me what we have been doing? So let me put my headphone on. Class participation time. We right off the rip. We going right off the rip. All right. Let me see if I hear. Somebody say good morning in the chat. Let me see in the Discord, see if I can hear.
Good morning.
Okay, yeah, I hear you. Thank you. All right. Can somebody tell me, right, what we have been doing on the monthly chart since the close of June? What have we been doing on the monthly chart since the close of June? If you don't know what June is, that's June right there. I forgot somebody said make the candles bigger. Can y'all see that? I can't see that line on there. Let me make that bigger. I can't see that line on there.
We've been consolidating.
Consolidating. Thank you, Marco. Let me make this fatter. Okay, now I can see the line. I can see the line now. Okay, I'm making sure y'all can see. We've been consolidating. All right, so on the higher time frame monthly, we've just been consolidating. What did we say the bias was on the monthly chart? Right, back when, since the whole time we've been analyzing price all the way, let's go back to forever. What we've been saying has been the bias on the monthly time frame.
Bullish.
Bullish. Right? We've been bullish on the monthly time frame. The higher time frame monthly has been bullish. Right? So if you want to trade in the direction of the higher time frame, you will be looking for reasons to buy since forever. Right? You will be looking for reasons to buy. Does that mean you're going to be buying every day? Does that mean you're going to be buying every week? No, it's not. You're going to. That's the problem with when people, especially when it comes to ICT concepts, right? When just because the overall time frame is bullish, it don't mean you go in there and try to just buy every dip, right? You need to know when to buy the dip, right? And when do we buy? When does smart money buy? Or where does smart money buy, should I say? Where does smart money buy? In a premium or discount? Huh? Question.
In a discount.
In a discount. Smart money buys in a discount, right? So, and discount is a relative term, right? Discount is a relative term. This is what we have to understand about the ICT concepts, right? Price is what? Right? Price is what? Fractal.
Yeah.
Right? I can't spell it all out right now. Price is fractal. And what does that mean? Well, I'm glad you asked that question. Hey, guess who we ain't seen in a long time? Hey, Tim, what do you mean by price is fractal? Hey, little Timmy Rogers, boy, I ain't seen you in the month of Sundays. Hey, price is fractal means that the same things repeat over and over on different time frames, right? Just like a spiral or a coil, right? The same thing repeats over and over and over and over and over on different time frames. So, since price is fractal, that means that discount is relative, right? What does that mean? A discount on the monthly chart can be an extreme premium on an hourly chart. Y'all get that? That makes sense? Did I lose anybody just then? Huh? Did I lose anybody just then? Are you lost? Are you lost? Okay, nobody's lost. Everybody track. Okay, so price is fractal and discount and premium is relative, right? What takes precedence, right? The higher time frame or the lower time frame?
Right? The higher.
The higher time frames takes precedence. That's a F, right? So the higher time frame, it takes precedence. The higher time frame is king, right? So if the higher time frame is king, right, we want to understand where we are in the higher time frame, right? We want to understand where we are in the higher time frame. And Tim, what do you mean by that, right? When I say you want to understand where you are, right? Just like here, what do we say prices have been doing from June, right? Since June, what do we say prices have been doing? We said price has been consolidating, right? So on the monthly, on the higher time frame monthly, where are we? We're in a consolidation, right? So on the monthly time frame, we're in a consolidation. So when you're in a consolidation, right? What do you expect? Do you expect price to be very easy to trade or more difficult to trade?
More difficult.
More difficult. And what has price been over the last as long as we can remember? They done made up all kind of excuses. They done said inflation. They done said the war in Ukraine. They done said they done said the election. They done said what else? They done said they earnings, bad earnings. They done said all kind of stuff, right? And so price has been extremely difficult to trade, right? But when you think about it, we've just been consolidating on a monthly. So there's your reason of why price has been very difficult to trade. We've just been consolidating on the higher time frame, right? That's why for anyone who does not believe in an algorithm, you're free to exit right now. You're free to exit right now, right? But if you really want to understand what's going on with this price, because I'm just some knucklehead from Fort Lauderdale, Florida. I'm just some simple dude from Fort Lauderdale, Florida, right? And I've been on Al Gore's internet for a couple years now, and people have seen me say, hey, if price does this, then it should do that. This is what we're expecting. If price does this, we're expecting it to come here, right? I do not have a crystal ball. And plenty of y'all on here can attest to the fact that when we look at this price and say, if price does this, it should come here, and it does that, right? I learned this from Michael J. Huddleston. I don't know anybody that works anywhere to do with the stock market, and I'm able to read these candles and tell you what price is going to do to a high degree of accuracy. So if you still don't believe that it's being run by an algorithm, you're free to leave. And I'm sorry for offending you. But the higher time frame has been consolidating, and there's your reason why price has been uber difficult, right? And as we see October there, we're still Christmas tree trading, right? We had a green, red, undecided, green, red, right? Christmas tree trading, green, red, green, red, green, red. Barcoding, if you will. See, it look like a little barcode right there. Just staying in that range. Up, down, up, down, up, down. Little barcode trading. That's what we're doing on the monthly. Right? Let's go to our weekly time frame. Hey there, Mr. Paintbrush. You're hiding over there on me. Weekly time frame, right? This is our weekly chart, right? This right here was last week, right there. That's last week. And who remembers, we're going to take this week off, right? Boop, take that week off. Pretend like y'all never saw that week, right? This right here, that little red indecision candle there, that's last week's trading. And this candle here, well, let's put it at the beginning of last week, right? That's last week's trading there. As y'all see, we were watching. Let me show you the things we were watching. We were watching to see if this became a reclaimed inversion fair value gap. Remember we said that, why can't I click that? Remember we said that this right here was the SIBI that we were in, and we were watching this BISI to see if it became a reclaimed fair value gap, right? We also said that this, okay, here we go again. What did we say this was also? We were looking to see if it became a reclaimed fair value gap, but what is this area right there also? Between this BISI and this SIBI right there, what is that?
A balanced price range.
A balanced price range, right? Balanced price range. So you see we traded up to the balanced price range on the week of September 23rd, right? We failed to reach it on the week of October the 7th. We traded up through it, right? Closing out that SIBI on the week of October 14th and respected it. And then we said we're watching it here to see if that BISI becomes a reclaimed fair value gap, right, to push price higher, or if we continue to respect this balanced price range, right? We watching. That's why I had the question mark of reclaimed fair value gap with a question mark, right? Want to know, right? Now that we This is but this was before last week would have started. But since last week, let me see where we at. That's the 21st. That's the 21st. Okay, and then the one that just went by was the 28th, right? So this was last week's price, right? This was the week before, not the week that just passed, right? So that's the old price. And we said if we, on the daily chart, right, we were looking for that. Now, we was looking to see if this was going to happen. Now, looking at our daily chart here, we said if we get above here, right, we want to see it use this reclaimed fair value gap on the weekly to push up toward this high, right? What did we say about this low right here? Who remembers what we said about that low right there? Let me I gotta remember to make this stuff bigger because we got people watching on devices. Who remember what we said about that low right there?
Would that be the area or the line that would take us back bearish? Or
Yes. For the confident way you said that. We said that if we get displacement below this low, then our attention would be this low and possibly that low, right? We would draw our attention to the sell side if we got displacement below this low right here, right? So that's what we were looking at going into the week. That's what we talked about going into the week, right? And then let's go down to the 15-minute and look at how this was that week. We covered that week. This was the last. This was, y'all remember we went through this week here. We looked at this week. This was that week when we watched that week. We said we started out, and let me put the days on here so that it'll make it easy for us to see. Don't worry about the counters being squanched up. We're looking at the overall time frame going back to remember, bring us, for anybody who ain't keeping the stacks on stacks on stacks, blocks on blocks, we going back to, you know what I'm saying, refresh everybody on what we were thinking coming into the week that just traded. All right. So this is the week here. All right, we'll put this. All right, that's the start of the week there. That's the end of the week. Now, this is the prior week prior to. This is the week of the 21st, right? This is that we're talking about this week right here now. We're going to look at the week of the 28th, right? But this is the week of the 21st. We're showing what we were talking about leading into last week. Okay. So we looked at the week prior and we discussed how, right, that week we had our accumulation, our manipulation, and then our distribution up here, right? We distributed above the old highs and then the market sold off. We had our accumulation, our manipulation, and our distribution. Okay. And then coming into the week, we had said we was looking to see if price was going to use this as a recause. This was our draw. Coming into this week here, this was our draw, right? We had us a clear draw coming into this week, right? Now, when we came into this week, right, it was more of a neutral bias because remember we talked about that price had been consolidating through this whole range, right? And so since we was here at 50%, we pretty much right in the middle of the range. It was more of a neutral bias, and we wanted to see if price was going to get above this and use it as support, or if price was going to get below this and use it as resistance. We were 50-50, right? Coming into it. That's what we was talking about. We had a question mark here. That's an ugly question mark. And we gave our invalidation point to this. And why was this our invalidation point? Right? Who wants to take a stab at why this down here was the invalidation point? Who wants to take a stab at that? Why was this the invalidation point? Right? Why wasn't this high the invalidation point? Why was this the invalidation point? Who wants to take a stab at that? This requires a little bit of sprinting type thinking now. Right?
That started the whole run.
Say again?
It started the whole run upwards.
Okay, it started the whole run. You're in the right lane, but why is this the invalidation point and that not the invalidation point when we're sitting in between? Why is this the invalidation point? Right? If we don't have no bias, if we're neutral right now, right, what makes this the invalidation point instead of that? You're in the right vein saying this started the whole run. But what do we say at the very beginning?
What do you mean by invalidation?
Like invalidates like, okay, we're like, I don't know how to explain. Have somebody help me explain invalidate? I don't know. You're in the right vein, but like I'm saying, you got a swing low there and a swing high there. So if this, we're saying, okay, we're neutral in the short term. We're neutral. But if this is the invalidation point, why is that the invalidation point and not this, right? You got to swing there. You got to swing there. We're right in between. What makes this the invalidation point? Now, to get your answer, what do we say when we first start looking at the charts? What did we first, in the beginning, what did we say when we first started looking at the charts? I'll give you a clue. Say again.
Monthly was consolidating.
The monthly was consolidating, and since it was consolidating, I mean, it was consolidating, but it was what? Right? Bullish. Mm-hmm. The monthly was bullish, right? So, yes, we're in an uptrend. There you go, Ruth. So, if you're in an uptrend and you're sitting neutral, what do you always default to? Whatever the higher time frame trend is, right? So that's why this is the invalidation point, because the higher time frame trend is bullish, and if we start displacing through this, we're not looking up anymore. You know what I'm saying? We're looking down, because even if you're in a bullish trend, you have to come down to get liquidity. You see what I'm saying? So if we're sitting neutral, right, and the higher time frame is bullish, right, when you see something that invalidates a bullish bias on a lower time frame, right, you start looking lower to see what it can be attacking to be rocket fuel for that higher time frame narrative. That's why this is the invalidation point, right? If we're neutral, right, and you say, okay, this is the invalidation point, that means it's invalidating some type of bias, right? And if you're neutral, you don't have a bias. But since this is, say, if displacing below this says stop looking up, then that's the invalidation point for the short-term bullishness. All right, y'all tracking? That makes sense? Or did I just confuse a lot of people?
No, that makes sense. That sounded like it's a big tip and a big help. I just gotta keep on rewatching it.
Okay. Stacks on stacks. Very good. Now, so that was going into the week, right? That's what we said going into the week. Now, let's put the week back on there, and then we're gonna look at it on the 15-minute chart, right? X that out. Yes. All right. Here we go right here. So now, on coming into the weekly chart, right? We hit this now, right? We've hit that, but we haven't displaced through it yet. So on the higher time frame, right? When we come back to our higher time frame, go back to our weekly, right? Go back to our weekly. Matter of fact, go back to our monthly, right? Go back to our monthly, right? So for our higher time frame, right? Go back to our monthly. Here's oh, that's the month. I'm like, wait a minute, where did that calendar come from? But that's monthly. I'm sorry, I forgot that we're on the monthly chart, right? So coming back to our monthly, right? We've been consolidating, right? We haven't broken out of the range or did nothing, right? So we're still consolidating, still no clear indication of what price we want to do on the monthly. We already said that. We said that from the beginning. We consolidating, right? Going back to our weekly, right? That's the low, right? That we will watch and saying if we displace through that low, then we're going to start looking lower, right? Why would we even be looking at that low? Why? Because the market takes out liquidity to use it as rocket fuel, right? It takes out liquidity to use it as rocket fuel, right? If you want price to go up, you want to see some type of retracement, right? You want to see a retracement, you know what I'm saying? Take out liquidity and then use it as rocket fuel. What I always say, no raid, no trade, right? No raid, no trade. If price ain't raiding stops, right? It's not giving you an indication that smart money is ready to, you know what I'm saying, blast off and make a move, right? What is, when we think back to pairing things together, right? Consolidation is paired with order blocks, right? Retracements paired with fair value gaps, right? Consolidation is paired with equilibrium. Expansion is paired with order blocks. Retracements is paired with fair value gaps. Liquidity is paired with reversals, like stops. Running stops is paired with reversals, right? So if you're looking for a price to go be bullish, right? You would want to see price come back to a discount, take out some liquidity, and then you can be like, hey, price is pulling back into a discount, is coming back to an area of fair value, is coming back, you know what I'm saying, to some type of PD array, is coming back doing something important, right? And then you start to flesh out what is it doing, right? What is it coming back to? You're looking at PD arrays that it's coming back to, right? Remember we said we came down to that swing low that we said if we displace below there, we're going to be looking lower, right? And then now you see we came there on the week is over now, because it's all about the closures of these time frames, the closures of those candles. The algorithm is telling you a story on that time frame because price is fractal, right? And you want to, and we said that the higher time frames take precedence. So that's why we spending time now on the higher time frame to understand what the higher time frame is telling us. Okay, so coming into this week here on the weekly time frame, right? I'm going to change this to purple because purple is my weekly color, right? Coming into this week here, right? We talked about this on one of the streams, right? We talked about this on one of the streams. I can't remember what it was, but we had marked this out, right? We looked at this right here. We had this. If somebody remember what stream we talked about this on, let me know. Because we talked about the prior week's low, because we had this marked out. I had that marked out. I had this prior week low marked out right there. That was from 1021, right? All right. We had this one marked out. It was from 10.7. Right.
Is that purple line marking that order block?
No, that purple line is marking where the low was at. We ain't got to that yet. We gonna get you. You're ahead of class right now, Marcos. You're ahead of class right now.
I'm trying to understand. I'm sorry.
That mean you all over. You seeing that? We gonna talk. We was about to talk about that, but you seeing that? You see how Marco popped in and say, "Hey, that purple line marking out that order block right there." You see, we sprinting, baby. Look at Marco. Y'all shout out Marco in the chat, man. Y'all give it up for Marco. Hold on, where my soundboard at? Let me get over here on my soundboard. Y'all stop playing with Marco, man. Uh-oh, I hit the wrong thing. Get out of the way. Y'all stop playing with Marco, man. Y'all get up for Marco in the chat, man. Let's go, man. Marco say, hey, man, you see that order block over there, man. Here we go. So we had we're gonna get to that in a minute. I put that purple line there because we gonna talk about where the price stopped at there. That's why I put it there, Marco. But good job pointing out that it we stopped right there at that order block right there. And if you want to look at other things, it's a mitigation block right there too. Okay, so we had this marked out, right? We had that prior week low there marked out. We had that prior week low right there marked out. Okay, and we were talking about only marking out key levels on your time frames because you don't want to like overmark your chart. You don't want to overmark your chart, and you only want to have key areas of focus on the chart. Okay, and so we had the lows from the 21st, right? We had the lows from the 21st, right? This right here was our main focus of if we displace through that, right? If we displace through this, we want to start looking lower, right? If we displace through this, we want to start looking lower. And whenever you get like a key level of liquidity, you always want to know how far below that can we go, right? So below this weekly low right here, right, we have a new week opening gap right there. Let's mark out a new week opening gap because we had that marked out. That is from the 23rd, right? Got a new week opening gap right there, okay? And then below that new week opening gap, we got liquidity right there, right? So those are our weekly levels to the downside that we're watching, right? Because we want price to come sweep liquidity to go higher, but we don't want it to displace through, right? Because if it displaces through, right, we're going to start looking lower, right? We're going to start looking lower. So that's why that's our invalidation point, right? That's our invalidation point. And so we see here that we swept the invalidation point and then respected it, closed back inside the range, right? We came down here, swept liquidity, closed back inside the range, right? The new week opening gap did its job. And now we see that we hit an order block, right? Now let's get over there to what Marco was talking about, getting ahead of the class, right? On your higher time frame, like your weekly, right? You want to understand, right? Why did it stop here, right? Why did it stop there? It stopped there because, right, we came down to a bullish order block, right? We came down to a new week opening gap, right? We swept out liquidity, right? And then we came back up and respected it. So now it's showing you that it's still inside this little consolidation range, just like on the monthly. We've been consolidating on the monthly, right? We've just kind of been consolidating here on the weekly, but the buy program is still intact, right? The buy program is still intact because we're still, if you look here through over all these weeks here, right? Over all these weeks, we are still respecting the discount PD arrays, right? Over all these weeks, we're still respecting the discount PD arrays, right? Pay attention. We come here, we push through the buy side, right? Because coming from here, this is a premium PD array, right? We push through the buy side, right? And then we trade back down to the discount, right? And come back up and close, respecting that, right? We push down, right? Through consequent encroachment of that wick. Don't take the sell side, right? And push back up, close up here above the high, respecting the discount, pushing through the premium, right? Then we come here, trade back down to the volume imbalance right there. We trade down to the volume imbalance or new week opening gap, whatever you want to call it, right? Come back up, close above. We're respecting the discount PD arrays, okay? Got us a little indecision counter where we took buy side and sell side, right? And closed up here above the new week opening gap, right? Respecting that discount PD array, respecting the consequent encroachment, right? And then we get here and we get a deep retracement, right? We get a deep retracement down, coming down into the new week opening gap and into the into the liquidity, but we reject off respecting what the invalidation point that we were looking at, right? We didn't displace through it, right? Also, we respected the order block. Okay, we respected the order block. Boom, we're respecting the order block. We're respecting the swing low. We're respecting the new week opening gap, right? So we're still respecting the discount PD arrays, right? We're coming down here, soaking up liquidity, but we're still respecting discount PD arrays. So the buy program is still intact on the weekly, right? Buy program is still intact on the weekly. Right, and we said that it stopped. We want to see, put that line there to see where we stopped. Stopped at the order block, right? Stopped at the order block and the new week opening gap. Okay, now looking at the daily chart, right? Now looking at the daily chart, right? As we start to come down, right? Now we see on the daily chart that we are, right? We're still somewhat range bound, right? We're still somewhat range bound, but we starting to get a little bit more structure that we can really relate to, right? Starting to get a little bit more structure that we can really relate to, okay? And on the daily time frame, right? On our daily time frame, we see that we were in an area where we had sell side and buy side, pushed above that area, sell side and buy side, pushed above that area, but we did not, what did we not do here? When we pushed above this area here, we did not displace above here, right? We came above there, closed above it, but then we quickly closed back inside. So what are we saying here? If we don't displace above there, right? We're not displacing above there, then we're going to start looking down, right? And what happened? We didn't displace above here, right? And so we pulled back down into the range, sweeping out that low there, right? So now we're at the point where here we're still in a tight little range. The daily time frame is still not giving us any indication of what it wants to do, right? But the higher time frame, the buy program is still intact.
Looking for. Yeah.
Yeah. What are we looking for? That's cool.
Huh?
Yeah. Yeah, nah, you ain't on mute. So it's still in like this little range. So we still ain't got no clear indicate. It ain't overwhelmingly clear of which way it wants to go. Right? Why? Because we're still here inside this consolidation. So what you got to do, you got to keep drilling through price and looking to see what price wants to do, right? Where we are at every level of price to see what is price going to do in the shorter and shorter and shorter time frame? Because we already know in the higher time frame, it's bullish, but we're just consolidating, right? Go back for anybody that just tapped in. Monthly time frame, right? Monthly time frame is bullish, but it's just been consolidating since the close of June, right? All right, we came up, slide to the right. Weekly time frame, right? Bullish buy program is still intact, right? Bullish buy program is still intact. We came up, retrace, came up, retrace, came. Now we come back up, right? Had a deep retracement here, where on the monthly time frame, if y'all remember, this was back when we traded down on the monthly time frame. We had came back down into that monthly order block. Remember we said over here, we came down, then we pushed up, we came back down into that monthly order block again and pushed back up, right? That was that deep retracement we got, okay? The buy program is still intact, but over the last few weeks, we've just been trading in this range, just been consolidating, just like on the monthly, right? All of this right here on the weekly, that's a whole bunch of moving, but that's that consolidation on the monthly. Remember them long wicks we was getting, right? We had them long wicks on the monthly. Go back and look at it. Right? See these long wicks there? Matter of fact, let's do this right here. I'm just going to mop around this. Draw a little circle around there. Right? And then go back to the weekly. See there? Yep. That's those wicks on the monthly. Right? Got to keep the different time frames in your mind. Right? What's going on them time frames in your mind? Higher time frame takes precedence, right? A lot of people probably thought the price was just like the market was going to crash right here, where on a higher time frame, when you look back, we just consolidate and we ain't doing nothing. Okay, so that's the weekly, right? That's on the weekly right there. And this right here, when we traded down here, right? When we traded down there on that weekly, right? Let's go down to, matter of fact, let's do this right here. Let's do this here first. Put that line right there. Put that line there. Move out the way, line. Don't need you. I'm going to change this black. Not leave it purple because that's weekly. And we're going to go 2 time frames down to the 4 hour. Go 2 time frames down to the 4 hour, right? And if we come from where we touched that line the first time, went up, came back down to that line again, right? What is that right there? Someone tell me what that is right there.
Sell model.
Market maker sell. Sell.
Oh, sell model? Okay, yeah, sell model.
Market maker sell model right there. Boom. We came there and we just, that right there on the weekly, right? What is this right here on the weekly? This right here is an expansion and a retracement, right? The expansion and a retracement on the weekly, right? Because we came here, we expanded up, we retraced there, right? Deep retracement, taking out liquidity. But that retracement on the weekly, right? Remember what I said, I like to go 2 time frames apart, right? That retracement on the weekly, you go 2 time frames apart, right? Go down 4 to the 4 hour. That weekly retracement is a 4 hour market maker sell model in this case, right? That's a 4 hour, that's a market maker sell model, right? And this is how, that's why I like to do the 2 time frames apart. When I say you want to see where you are in price, right? This is how you see where you are in price. So looking at what the higher time frame is doing, and as you drill down through the time frames, then you can start to say, okay, this where we are in price on the lower time frame, this where we are in the market maker buy model or the market maker sell model, and then you can decide to engage. Do I want to trade against the grain, meaning the monthly is bullish? Do I want to trade bearish because I see that we're in a market maker sell model on this time frame, so I can trade bearishly because I know it's going to come to this point, right? Because we're in a market maker sell model. Okay, with that being said, now we said we were on the weekly. The buy program was still, yes, the buy program was still intact. We were respecting. We can see that we were respecting that. So coming into this week, let's put it at the start of the week, right? So we see at the end of the week where we ended up. We ended up respecting the buy program, right? So now let's go back to the beginning of the week on the daily time frame and see how the week played out, right? Because we already know it was bullish, but as we see, this was a bearish week. So let's go and look for clues in price that could have tipped us off to say, hey, if you want to, you can participate in a bearish sentiment in the short term because this week is turning out bearish. Even though we're consolidating on the weekly and we're in a bullish uptrend, even though we're consolidating on the monthly in the middle of a bullish uptrend, here are some signatures to show you that this week is going to be bearish, right? And this is how you go back and study the price so that when you see it happening in real time, right, you already have your things. We already said, if it does this, then it should do that. We're looking to see if we reclaim this fair value gap, or we're looking to see if we're respecting the balanced price range. We're looking to see if we're rating these sell stops down here, right? We're looking to see if this stuff plays out. Now let's go down to our daily time frames, right? So looking at our daily time frame, right? Looking at our daily time frame, we see that this is the opening of the week right there, right? So that's the opening of the week. I'm gonna move to the side so we can see the candle, right?
Crystal, can you bring me a cup of juice, money?
Yeah, Crystal, give me. I want some juice too. But
sorry.
you good, man. You good. So this is the start of the week right here. That's the start of the week. Let me make the candles bigger. Right, this is the start of the week there. Right. So coming into the week, right? We're coming into the week. Let's mark out the weekly open. Right. So we're gonna mark the weekly open because we all know the importance of the open, high, low, and close, right? Right. We all know the importance of the open, high, low, and close. The algorithm uses the open, high, low, and close on. I don't have a weekly open. Man, I don't have a weekly open. Okay, let's just do this. We're gonna box top week, and we're gonna go weekly open. We're gonna go week open, and since we're talking about the open, we're gonna make the line orange. We're gonna make the line orange, and we're gonna make it a dash line. All right, that's our weekly open right there, right? So on a daily time frame, right? I want to get some information on the chart here. On a daily time frame here we are. All right, here we go. We trade up here on Monday, fail to take out that Friday's high. Right? Fail to take out that Friday's high. When we fail to take out that Friday's high, right? What do we form right here? We fail to take out a Friday's high. What do we form right there?
A swing high.
A swing high, right? So now we see Friday we came up and took out that swing high, right? And we rejected off of it. And then we trade up on Monday, fail to take out Friday's high, and we create a swing high, right? So if when price trades up into a high and rejects off of it, what do we start to look at for a potential draw on price?
The low that sent us there.
The low that sent us there. right there, right? So coming into the week, right there, right? Coming into the week, right? We're sitting neutral because we're just consolidating on the higher time frame, right? We're sitting neutral in the short term, and we're looking for clues of what price is going to do, right? So coming into Monday, we see that Friday we took out a high and rejected it. So now we're already potentially looking here, right? Why? Because we rejected that high. Now, if we want to come here, right, what do we want price to do first, right? We want price to take out liquidity. We want price to get the rocket fuel to go to Picasso's house, right? Go to Picasso's house. Now, Monday, we failed to take out that high and created a swing high, right? Tuesday, right, we took out the low, and then we went and took out the high. Okay, we took out the low, and then we went and took out the high, right? So remember back on Tuesday when we were talking, what did we say? We said that we could have made for the bullish stance, we could have made a Tuesday low, right? We could have made a Tuesday low of the week to proceed higher because we were back on the top side of the reclaimed fair value gap. But we said we're looking at this reclaimed fair value gap on a weekly time frame. But the lower time frames can use it. So we made a low, and then we went up and we took out the high, right? When we took out the high, we closed back inside of it, right there, right? We closed back inside of it. So we still sitting there because remember when we back on Tuesday, we said either let's go back to Tuesday, all right? All right, walking y'all through the reason why we say the things we say. All right, so looking at Tuesday's price, y'all remember when we were here, we said that this was our weekly open, right? And we said that it could either be a consolidation, a manipulation below the low, and now we're reversing, right? And we will be looking for a retracement if it was bullish. And then we said, if we take out this low right here, then we would look at this low and possibly that low. And that low right there was what? Our invalidation point, right? That was our invalidation point if we displace below that, right? So we said because if we take out this low, right, then we know that this was the manipulation phase of price, right? Right? Because y'all remember when we was talking about it, we was like, where is this right here? Right? We was like, where are we? We was like, Endeavor was like, we're in the manipulation, right? Because we were like, if we come back and displace below that low, then we know that this was the manipulation phase of the price, right? But if we don't come back and displace below this low, then we know that this was the manipulation and price wants to go higher, right? If we displace below that low, then we know that this was the manipulation leg and price wants to go lower. And if price wants to go lower, we're going to look at that low and then that low. And that low right there, that's our invalidation point, because if we displace below that, then we're looking for price to keep sliding, right? So now that was back on Tuesday, right? Now let's put the meat back on the bone. And as you see, where are we now? Right? So that turned out to be the manipulation leg in price, right? And there's the low that we talked about. We came down below the low, consolidated there, right? And then dropped down past that low and down to the low that we said, this low and that low. That was our invalidation point, right? And then now we've gotten there, and you see what's going on there. We still haven't displaced through, but right, we still haven't broken back above here. Now we've completed the market maker sell model, right? We've completed the market maker sell model there, right? But we still haven't, right, traded back above there to let us know that, yeah, right, we are in a market maker buy model there, right? We're still waiting for more information. Why are we still waiting for more information, right? What do we come to, right? What are these? What do we look at these as? This prior week's low, this new week opening gap. What do we look at those as?
Anticipatory reactionary points.
There you go, right? Anticipatory reactionary points. We've come into weekly PD arrays, right? We've come into weekly PD arrays. So now we're waiting on price to show us what it wants to do, right? Now, that was everything that we was talking about going into it. Now, let's go back and again start looking at some of the clues that price was giving us going into the week, right? So on Monday, ain't a lot that we can see on the daily chart, but on a Monday, right, we traded up, didn't take out Friday's high, right, forming a swing high. On Tuesday, right, who could tell me what this is on Tuesday right here? Everybody and their mama should be shouting this out right now, right? On Tuesday, what did we do? We came down, we went up, and then on Wednesday and Thursday, we just dropped off. What's this right here? What's that? Everybody named.
Is it a change in the state?
Everybody should be shouting it. We've been talking about it forever. The wig snatcher. Who said that? Who was that? Was that Marco? That was Marco. That was the wig snatcher, right?
What's the proper name of that?
It ain't got no proper name. That's just my favorite. Okay. That's my favorite signature and price, right? And what it is, right? And shout out here to Learn and Share for coining the term the wig snatcher. So what happens is, right, it's kind of like it's sort of like a double Judas. It's like a double Judas almost. Like, so what happens is, right, price goes in the right direction, right, forcing breakout traders in the right direction, and then it immediately turns around and takes them out, right? So it forces them in the right way and then immediately takes them out. So now there's your Judas swing right there. Now they're scared to get back short, but it forces long traders in and then reverses on them and takes them out. You see what I'm saying? So there's a Judas in that direction. You see what I'm saying? So you're going the right way, then immediately take them out and then go the right way, right? That's my favorite signature and price. When I see that set up there, then I'm like, oh yeah, I'm really going short over here. Or if I see it going long. And this plays out so many times. It's not going to play out every single time, but when you see this play out, that's when you like, oh yeah, it's about to happen. And we've been talking about this. Oh, how many times we done talked about the wig snatcher in the last week or two? How many times? Somebody just tell me how many. Just if it's a lot, just say a lot. If you know what I'm saying, if it's a lot, just say a lot. A lot. We've been talking every day. Somebody said every day. I ain't saying it happen every day, but this is what Michael tried to get people to understand. This stuff, right? This stuff happens every single day, but if you're not looking at the right time frame, you won't see it. Remember the other day when we talked about is it expanding or displacing on the time frame? Is it spooling on the time frame you're watching? Right. And remember when I used the thing of, okay, we're gonna look at a seconds chart and we mark out 60 candles, and we like, okay, for this one minute candle, it looks like this across 60 candles to give you the visualization of this stuff is happening every single day, but you may not be watching the right time frame, right? And if you're not watching that time frame, no harm, no foul. That means you're just not trading every day, right? But if you want to be a maniac and dig down to every single second chart there is, then you might trade every day. But this stuff is happening it's happening every single day. But don't go looking for it every day on your time frames that you trade. But when you see the signatures on your time frame that you trade, then you like, okay, here we go. You know what I'm saying? It's time to go. Here we go. It's time to go. So now that's what the wig snatcher look like on the daily time frame. And you see on the daily time frame, it's just candle by candle by candle by candle. It ain't like a whole lot of detail to it. You see what I'm saying? It ain't a whole lot of detail to it. And why can't I see my dates anymore? Why can't I see my dates anymore? They said it's supposed to be there. Am I tripping? It's saying it's supposed to be there. I know I ain't tripping. Am I tripping? Days of the week, bottom, yes. Man, I know I ain't tripping. It's driving me crazy. Days of the week.
And while you're doing that, I got a quick question.
Yeah.
So if you said the higher time frames in the buy program, so the weekly's in the buy program, right?
Uh-huh.
And the lower time frames have to be in the sell program in order for the have that which you the lower time. Excuse me if I'm unclear. I'm trying to get it all in my head. So the higher time frames in the weekly buy program, if it's doing a retracement or a retracement of any sort in the lower time programs, that's got to be a sell program. How do we know when that higher time frame is finally going to go into a sell program, or how do we know in the lower time frames? I'm not sure if I'm being clear. It's finally going to switch to the higher time frames to be in a sell program. I'd probably screw all that up, but
that's where your invalidation points come into play.
Yeah.
That's where your invalidation points come into play. Like when you like you could have just like you could have a bearish break in market structure on a lower time frame, you know what I'm saying, to make you think, okay, we finna start going lower, but you still haven't reached a invalidation point on the higher time frame. You may just be trading down to an anticipatory reactionary point on the higher time frame. You understand what I'm saying? Once you
So, I'm sorry.
Go ahead.
So it has to break that invalidation point on the higher time frame to say, okay, we're changing programs.
Yes.
Is that correct?
Yes.
Okay,
yes. You want it to you wanted to displace through like you want to get to a point where you've gone through all of the discount or premium PD arrays that's there to keep price in that program. You know what I'm saying? So as you're going down, you're looking at everything that now it voids this narrative of, okay, we should keep going up, right? And you looking at it on that time frame's candle closures, right? That time frame's candle closures. Because if we, you know what I'm saying, if you're looking at we were looking at, like, just say here, like where were we? We were here on the weekly, right? We were here on the weekly, right? If we start displacing through this low right here, right? Because we can raid this low, we can raid that low. But if we start displacing through these lows right here, that's not good, because we do have this bullish order block right here, but now we're starting to show a lot of weakness on the weekly time frame when there's no cause for that to be happening on the monthly. You see what I'm saying? There's nothing down here for the monthly to be drawn to that we haven't drawn to already. You see what I'm saying? So it's like,
Yeah.
it's about like the time frame above it. Is there something down there to go to that would make me push past this time frame? And if it is, then I can, like on the weekly, right? We got an order block down here, right? We got an order block right here with a low that has not been touched yet, right? And then we got another swing low down here that has not been, we got a swing low that has not been touched, and we got a low that has not been touched right there, right? So on the daily, right, if we trade, you know what I'm saying, if we trade past this low right here, right, we still got a reason for the weekly to come down here. So coming past this low on the daily doesn't surprise us. You see what I'm saying? Coming past this low on the daily doesn't surprise us. Coming down to this low on the daily wouldn't surprise us, right? But if on the weekly we start to displace below these lows here, now we're like, okay, we getting a little bit too bearish on the weekly, because there ain't no reason for the monthly to come down there. You following what I'm saying?
Yeah, no, I do.
Okay. All right. And so what was I about to say? I don't know, but we'll just pick it up. That's our weekly open right there, right? Oh, that's what it was. The wig snatcher. Let's talk about the wig snatcher, right? So on the daily, right, we see that we went in the right direction, right? And then not only did we go in the right direction, we came into a imbalance, right? And then we blast off, and then we took out the buy side, right? There's the raid, right? There's the trade, right? So we got our accumulation, our manipulation, and then our distribution, right? How do you know we distributed anything, right? We came below the low, and then price pulled up off of it. You know what I'm saying? Accumulation, manipulation, distribution on the daily, right? We was looking for clues, right? We had a swing high that was created on Monday, failed to take out that high. Swing high, still showing weakness, right? So clue one, didn't take out the high, still showing weakness. Well, actually, clue one was Friday, right? We took out the high and we rejected it, right? But coming into this week, we had took out the high and rejected it, so we eyeballing that low right there. Monday, failed to take out the high. Respect consequent encroachment of the wick, right? Right? Still showing weakness on the daily. Tuesday, right? We trade down into the imbalance, trade up, attacking the liquidity, right? So here comes the Judas swing, right? Here comes the Judas swing. We get the Judas swing, right? Right? Going the wrong direction, forcing in the breakout, but in the middle of getting a Judas swing, we got the wig snatcher setting up right there, right? Then Wednesday, we open up, right? Wipe out anybody who still hadn't been taken out yet on a short, right? I mean, on running their stops, right? Taking out anybody who had some stops up there, ran their stops, and then broke down, right? Coming down below, closing below the weekly open, right? So all of this up here, right? All of this up here, what is this? And the sensor on this time frame right here, right? And you see how we move in there? See how we're going up, then coming back down, right? What would this area up here be? What would that be right there?
Smart money reversal?
Yes, that'd be a smart money reversal up there, right? What makes that a smart money reversal, right? We're above the highs. We're above the opening of the week, right? We're up here in a premium. So we're in a deep premium above the highs, right? Above the opening of the week, right? Now, the higher percentage of the times is the weekly high on a Tuesday, but we can make the weekly high on a Wednesday, right? Right? The weekly high can be formed Monday through, it can be Monday, Tuesday, or Wednesday. It's just a high percent of the time. I think it's like 70% of the time for it to be on Tuesday. But you can look for the high of the week to form anytime between Monday, Tuesday, and Wednesday, right? We formed the high of the week. That's our smart money reversal. And then price melts off on Wednesday and Thursday, right? Now, coming into, well, after Wednesday had closed, right? What did we talk about this Wednesday? We said it was cutting through a balanced price range, right? Y'all remember that? Y'all remember us talking about price, how price just melted down on Wednesday, and we said it cut through a balanced price range, right? So now coming into Thursday, right? And I can't remember who asked something. One of the mentees asked it, was like, how can you prepare for the move? Like, and I was like, you can't really prepare for when it's gonna happen, but you can look to the left and say, hey, we got a balanced price range here. Either we gonna use it as support or we gonna cut through it like butter, right? And since we're looking at it as consolidation, manipulation, right? And we're coming down, you're expecting lower prices because we rejected that high. We failed to get that high. We respect consequent encroachment of the deepest wick, right? We rated the liquidity, right? One more time and then dropped, right? Dropped. Now we're down below the opening price and we're cutting through a balanced price range that was over here on the lower time frame. We talked about that, right? We're cutting through the balanced price range, and then now we're coming back here, right, to this daily balanced price range, right? Because we offered buy side and sell side, and we left the area, right? And as soon as we left the area, we start coming back in, and we're cutting through, right? And if you look right here, what we're cutting through right here, right? Just look at this part of the price right here, right? We've already offered buy side and sell side there, right? We traded both ways there, buy side, sell side. We've traded both ways there, buy side, sell side, and we only offered buy side there. So all we did was just offer sell side, just cut. There's no reason for price to be held up here because it's just offering buy side, then sell side, right? You can see it's just cutting through it like butter, right? So now looking at this area there, we've offered, it's efficiently delivered, right? It's efficiently delivered. So what does price do? It just slices right through it and comes straight down to the liquidity, right? A low resistance liquidity run, right? So it's low resistance, but price is being held. You know what I'm saying? Price is being held, and we see that. It's evident that price is being held because even though it's just melting through like butter, intraday, they're holding price at key levels of time and then letting it move a little bit, hold it, move a little bit, hold it, move. And we've been seeing that throughout the whole week, right? So those was all the different clues that we got on the daily, because once we got here, it was just, if you ain't participate already, you probably done missed it on the daily time frame. So clue number 1 started Friday, rejecting that high. Number 2, didn't take that high and respect consequent encroachment. Number 3, the wig snatcher, right? We went the right way, went up, took out the high, but closed back inside of it, right? There, that's a type of, it's not a deep rejection, but we're not, you know what I'm saying, displacing through it, right? So if we don't displace through a swing high, right, you look to the low that took you there. I mean, that's that low right there. Yeah, you look for the low that took you there, and that's that low right there, right? And then, so those were your clues on the daily, right? Since we was looking at the weekly, let's look at the 4 hour. We'll just go down through each time frame for anybody who look at different time frames, right? So remember what we said. We said, what is this up here, right? So we're just going to circle this out right there, and then we're going to go down to the 4 hour, right? There's our circle right there. There you go. All right, and you can see, you remember when I said it's a low resistance liquidity run right there? How many up close 4 hour candles do we have here after this smart money reversal? You don't see not one 4 hour up close candle after that smart money reversal up there. All right. Low resistance. Low on this time frame, low resistance. Just melted straight down to that low right there. Right? Low resistance. Now, during this 4 hour low resistance run, there was a lot of back and forth on the lower time frames. A lot of head busting, a lot of uninteresting price action, a lot of I don't want to get involved in it. But when you zoom out to the broader view of what price is really trying to do, right? You start to see it with more clarity, right? You start to see it when you start to squanch up your chart, you start to see it with more clarity. Like, oh, I can see that. Oh, I can see that. How do you determine its smart money reversal? I'm sure you have it somewhere in your videos. Yes, I do, in the market maker models, right? In the market maker models. But the smart money reversal, that's going to be determined in hindsight. If you're not a turtle soup trader, the smart money reversal is going to be determined in hindsight. It's going to be once you see that you have switched to in this case, a market maker sell model, right? That's going to be determined in hindsight, right? Now, if you are deeply in tune with the algorithm, right? As we said, this is our smart money reversal right here. If you are deeply in tune with the algorithm, right? And you see price come down, right? We forming the wig snatcher here. You see price come down, right? And then you see price go up there, right? You're already anticipating this right here to be a bearish breaker. If you're deeply in tune with the algorithm, right? When you see it come down, make that low, and then shoot up and make a higher high, that check mark, if you're in tune with the algorithm and you're expecting lower prices, right? You want to see that check mark. Why? Because you see price come down and make a low, and then you see price rally and take out the high, right? When you see it take out that high, that you're looking at that as a Judas swing, right? You're looking at that as a Judas swing. What makes it stronger, my favorite signature, is taking out a low and then taking out a high with the Judas swing, right? Doing this, right? Doing a fake Judas swing, if you will, right? Take a low and then take out a high, right? And now somebody's going to be looking to go long there, right? But that's a fake, that what ICT called a fake bull flag, where it comes up, right, consolidates and then breaks out. Now, the bull flag traders, they're looking for a move this long in this direction, right? But you got a fake bull flag because you go up and then you end up making a bearish breaker and then going down, right? So you want to see, you're anticipating this to be a bearish breaker. So if you're anticipating this to be a bearish breaker, right, you can look for a reason to sell up here and get in on the smart money reversal. Why? Because smart money sells above highs, right? And a lot of people, a lot like myself included, right? When it comes to turtle soup trading, right? You want to be that person that just sells this high as soon as you touch it right here, and put your stop up there and say, oh, I turtle soup, I sold above the highs. I ain't with that because I ain't in the algorithm. I don't know the exact number it's gonna turn around at. I'm gonna look for the clues when you showing me it's turning around, right? So you can look for clues. Now you're in tune with the algorithm, right? And you can say, okay, now boom, we created a bearish order block right here, right? We got a change in the state delivery. Now I'm gonna sell that change in the state delivery and I'm gonna put my stop there. So I got a educated stop, but I'm still trading above the high with the smart money. I'm up there trading in the smart money reversal. But if you're not highly in tune with the algorithm, right, this is when you know, right here, when you trade past that opening price of them up close candles right there, that's your change in the state of delivery, right? That's your break in market structure right there. There you go. Those are your clues. We got an inversion fair value gap here. We got an inversion fair value gap there, right? When you're making these, right? And if you don't know what an inversion fair value gap is, we got this fair value gap here. When this candle closed, we created an inversion fair value gap, right? We got this fair value gap here, right? When this candle closed, we created an inversion fair value gap. So now you got inversion fair value gap, change in the state of delivery, because these are consecutive up close candles. But Tim, you said this was a change in state of delivery. That is a change in state of delivery, because when you have consecutive up close candles, right, this is your entire order block, but the focus of the order block is the last up close candle, right? So if you're in tune with the algorithm, anticipating this to be a bearish breaker, you can use that as your change in the state delivery. That's very aggressive, but you can use that as your change in state delivery to get in on a turtle soup above that high. I don't trade that. That's too aggressive for me, right? I don't even trade the low risk short. And in this case, we did not get a low risk short. Why? Because we cut through this balanced price range, right? Price just cut right through that balanced price range, just like butter, right? So hopefully that helped out. Got it. Thanks. Okay. Now, let's go down to 60 minutes. Oh yeah, that was our smart money reversal. And as you see, right, on this time frame here, right, we went up and down. Let's go down to 60 minute. Right, so on the 60 minutes is 2 time frames down from the daily. Right, so if we go to the daily chart, right, y'all remember on our daily chart for the week, right, we said that we had our open, accumulation, manipulation, and then distribution, right? And price closed off the high, right? Okay, look what I just look what I drew out. What is that? What kind of bar is that? That's a open, high, low, close. Right? That's an open, high, low, close bar. Y'all see that? All right, so 60 minutes is 2 time frames down from a daily, right? If you look here close on the daily, right? If you look here close on the daily, over here, you can it ain't got a lot of structure, but you can see that, right? We look like we completed a market maker sell model, right? It ain't got a lot of structure on the daily. It's just a couple counters up, couple candles down, right? Just look like some kind of retracement, right? And if we go 2 time frames down to a 60-minute, right? Go 2 time frames down to a 60-minute, right? Now we got a little bit more clarity involved there, right? A little bit more clarity involved there. Okay, so when we on the 60-minute time frame, get out of my way, right? 60-minute time frame. This is when the week opened right here, right? This is when the week opened there. Remember, right? Let's talk about. We was like, either this was going to be the manipulation or that was going to be the manipulation, right? We came here, came up here, right? We got our smart money reversal up here, right? Now on the 60-minute, remember back here on the 4-hour, remember we was on the 4-hour, right? When we came here on the 4-hour, remember when I said that on the 4-hour, if you were in tune with the algorithm here, right? What did I say about this right here? Who remember what I said about this right here? Right there. Who remember what I said about that right there? I said you can use that as what? Somebody speak to me. What did I say about that? I said you can use that as what?
An aggressive entry?
Aggressive, but what did I say it was? The same thing is down here, but it was the last up close candle, so I said you can use it as what?
Change your market structure?
Change, but not market structure.
Bearish order block.
Bearish order block, but
Yeah, order change in the state of delivery.
yes, a bearish order block, but that was your
block, right?
yeah, yes, it's a bearish order
Okay.
block, but I was like, you can use that as your change in the state of delivery, because and I was like, on this time frame here I was like, we didn't get a smart money. We didn't get a low risk short, right? We didn't get a low risk short, but you could use this as your change in state of delivery to set up your low risk short, right? Remember, you can use that as your, if that's very aggressive, I don't do that. But when we go to the 60-minute time frame, right? When we go to the 60-minute time frame, right? Looking at as far as market structure, right? We come up here, trade up, we get our smart money reversal there, and then we get our low risk short right there. Right? You see how we went up, right? Let's stretch it up so you can see it good here. Right. So we came up here, right? We had a quick little area where we paused in price. It didn't pause long, right? Quick little area where we paused in price, right there. So that's our last little area of accumulation, right? Quick little area. We traded down below that last area of accumulation right there, right? And then we pull back up into our low risk short right there. And where is that low risk short happening at? Remember on the 4-hour, we said that right there could be used as the change in state of delivery if you was in tune with the algorithm, right? You was expecting this to be a bearish breaker right there. You was anticipating that to be a bearish breaker right there. We'll get back to this in a second. Let's put a line right here. This is the lowest one right there. Right there. Right, that's our lowest one. Let me see. All right. And then you see how every time frame ain't gonna have everything, but when you understand what price is doing, right, on the 4-hour, right, we're just trading back up to an order block right now. Again, like I said, this in the sense of ICT concepts, that's your true change in the state delivery, because you have consecutive up close candles. So the change in the state delivery is when you trade through the opening price of the order block. But if you're anticipating it, you could use this, right? You could use this as you're changing the state delivery, because now you're anticipating this last up close candle here to act as a bearish order block, right? To act as a bearish order block, and you could go short there on the 4-hour if you're trading off of order blocks. And then now, as you see on the 60-minute, it's got a little bit more clarity where you got an imbalance that you've traded back up into as your low risk short right there. So price is fractal. So on this time frame, right, you're trading down below a small area of accumulation, right, creating displacement with a fair value gap and trading back up into the fair value gap and then displacing lower, right, displacing lower. Okay, and then giving another opportunity to get involved here after the 9:30 time frame right there into that fair value gap, and then going down to this low right here. Now, remember when we said here on the 4-hour, right, we're in tune with the algorithm, anticipating this to become a bearish breaker, right? Anticipating that to become a bearish breaker. If you look here on the 4-hour, right? On the 4-hour, we never got a retracement, right? We never got a retracement back up into it. And on the 4-hour, right? On the 4-hour, this right here is your lowest wick on the 4-hour, right? This right here, right? This right here is like the when we were coming down, pushed up and came down. That was like the area where we marked it out on the like the hourly, right? But on the 4-hour, that's the lowest point right there on the 4-hour. So on the 4-hour time frame, we never got a retracement back into the breaker, but on the 4-hour, you got a first touch opportunity, right? Came down once we traded down below there, right? And then over here, right, we traded back and we got this first touch opportunity there, right? On this candle here, we got the first touch opportunity where price pushed up a little bit, but we're inside this little wick right here. So you got like a first touch type opportunity there and drop down, but we never get like a retracement back in, right, on the 4-hour. Now, but on the 60-minute, on the hourly candle, right, on the hourly candle here, right, this is where, that's the 4-hour, right, so we'll leave the 4-hour line there, okay, and then we will come over here, and we will put we'll just put it on either the body or the candle, however you want to look at your breaker, right? Body or the candle, we'll put it on the body or the wick, we'll put it on the wick there, because when we look over here, it's overlapping with that fair value gap there, right? So put it on the wick there. We want to see the sensitivity in the wick, right? On the 60-minute, right, we come down, right? We come down, and then we retrace back up into the imbalance, into the breaker, right? This is the same area where we was anticipating this to become a breaker, right? On the 60-minute, we got a nice retracement into the 60-minute breaker, into the 60-minute fair value gap, right? Now, you say, Tim, I wouldn't have trust this to, because we got all these imbalances up there, right? Glad you said that, right? So now, right, since we got our 4-hour, right, we got our 4-hour breaker right here, we're looking for the sensitivity inside the wick, right? We're looking for the sensitivity inside the wick right there, right? It's little teeny little body, right? So we're looking for the sensitivity inside the wick of that breaker. Okay. All right, so we're looking for the sensitivity inside the wick of that, right? We come down here, create a breaker. Now, looking at the 60-minute, right? You're saying, Tim, you know what I'm saying? I got all these 60-minute imbalances going on up here, right? We come down. Now we're trading into what? A 4-hour breaker, right? So now that we're trading into a 4-hour breaker, right? If you say, okay, I don't trust this because I got all this 60-minute stuff right there. So now when you on the 60-minute, price trades back up into the 4-hour breaker. This is a higher time frame, anticipatory reactionary point, and then it displaces away, right? Now that it displaces away, and then it trades back up to the order block, right? Back up to the order block, back up to the imbalance there, right? And then if you look like, well, Tim, we traded back over all of these right here. What did we say price had been all this time? Very difficult. A lot of back and forth on the lower time frames, right? On the higher time frames, it's been very smooth and flowing, right? But on the lower time frames, it's been a lot of back and forth, let it go, back and forth, let it go, back and forth, let it go. It's been more difficult on the lower time frames, but you can see price is still, even though they're manipulating price and holding price, is still reacting to all of these different PD arrays on these different levels. It's happening every day, but is it happening on the time frame that you're watching? Right? Is it happening on it? You don't want to time frame yourself to death and get into analysis paralysis, but we're just walking through the different time frames because I don't know the time frames that people watch. Right? I don't know what time frames people watch. Okay, so again, we were talking about being in touch with the algorithm, right, and anticipating this to be a bearish breaker, right? And then now that you see on the hourly time frame, we actually got a retracement into what we was anticipating to be a bearish breaker. So if you was anticipating this to be a bearish breaker and you got short up here, this would have been an opportunity to add some more if you wanted to, right? In the sense of completing a market maker sell model down here, right? Completing a market maker sell model, because why? On the daily time frame, we said price had went up and came down, and 2 time frames down from the daily is an hourly. So coming over there and completing that market maker sell model. It ain't beautiful, right? It ain't extremely pretty. It's very ugly, right? And you may be like, well, Tim, I don't even see a niche consolidation, right? I see a consolidation huge right over here, right? We had a huge consolidation. We went above it, right? We broke below the last area of accumulation, right? We had that right there, right? See how we're going there? Well, actually, that was the last area of accumulation there, but in a larger sense, right? We had a huge accumulation where we started to run up, stopped there, broke back below that last area of accumulation, and then moved into the areas of distribution or redistribution there. All right. Get it? Got it? Good. All right. Let's look at 15-minute chart. So on the 15-minute chart, we can see the same thing, right? Got our market maker sell model, right, that we were looking at. This was the low that we were saying. We take out that low, then we know that this was the manipulation phase of the leg, right? Come down and take out, if we take out that low, that's the manipulation phase, right? And then if we see here what we said played out, the wig snatcher, we came down the right direction, came up, took them out, right? Came back down, took them out, traded back up into that 4-hour breaker. Remember that 4-hour breaker there? Traded back up, drop down, one more time, drop down, distribute below the low over here. Consolidate, pop. I hope it made sense, man. That's all I got. I hope it made sense. Anybody got anything for me? Man, we've been on here almost 2 hours. Man, I said I wasn't going to be on here long, man. Y'all tripping. Y'all tripping.
Are you taking questions?
Yeah.
Okay, perfect. My question is about the ES from yesterday. I just want to like make sure I'm getting the break-in market structure slash market structure shift right. Um, so I was looking at it on the 5 minute.
Okay. The 5 minute compared to what? Cause 5 minute a really low time frame. What are you looking at it compared to what?
Yeah, it was like it was just a 5 minute, to be honest.
Okay.
I used that and I also looked at the other indices, so divergence, but it was just a 5 minute that I had the
Okay.
question on.
Okay. What's your question?
So like looking at the range from 9:30, the 9:30 low to the high of 10:30.
You said 9:30 low to the high of 10:30.
Yeah. Like that's the overall range, but I was looking
I'm
specifically.
looking at the wrong day. Hold on, I got to get that Friday. Okay, Friday.
Yeah.
I'm looking at the wrong day. Okay, 9:30 low to here.
Yeah.
Okay.
So I seen it as if price came down and took out the order block at the 10 a.m. candle, so it's at equilibrium. Yeah, there. That would be a market structure shift and not a break in market structure, because a break in market structure would be if it took out the low there. But I wanted to know if that would be the right assessment of that. Yeah.
Well, the market structure shift and the break in market structure, that's like that's like the same thing. You know
Okay.
what I'm saying? And for me, I break it down between a shift in sentiment and a break in structure, right? Depending on which low I'm taking out, right?
Okay.
Depending on which low I'm taking out, right? So here, like, and I'm glad we're looking at this right here. Like for here, like trading below that low right there, for me, that's a shift in sentiment. And then trading below this low right here, right? That's a break in structure right there. And the reason why is because this low didn't take out that high, right? So when we trade below that low, that's bearish, but it's just like a shift in sentiment for me, right? But since this low, right, traded up, and it's just a very short high there, but we came above liquidity, probably came above something else over here too. I don't know. Yes, we did. Right there, we came above like highs over here too. So
And it
that,
went into an hourly order block, like
yeah,
the high
yeah.
up there. Yeah.
Okay, so this, and then so when we come down below that there, then for me that's a break. That's a market structure shift, breaking market structure, because now we went from like we took out external liquidity and then we came back and took out external liquidity, right? So that's a break in market structure, and that's a shift in sentiment for me. Like trading back to the order block, like how when you was like we traded back to the order block right there. I'm not I'm not putting that in the context of is it a break. I'm just looking at this order block did its job. It blocked price from going lower and it sent us back higher, right? It sent us back up to the last up close candle of this. You know what I'm saying? We haven't traded down below this yet, but we've traded down below that. So now we got a potential order block there. And since we got consecutive candles, right? Once we trade down past that price there, now that's our change in the state of delivery, right? But since we traded up into a premium PD array and displaced off, now we're looking for this as a potential bearish order block, right? And so we come here to a bullish order block, trade back up to the bearish order block, and then start our move down, right? So looking at I wouldn't even put the order block in my thinking of, is this a like trade in there as like a shift in structure or in nothing like that. It's just, you're coming to an order block. Is it going to do its job? We respect and consequent encroachment. Yes, it's still doing its job, right? Is this order block going to do its job? Where, we coming up, mean threshold. We coming to mean threshold. It's still doing its job. And now we're starting to create inversion fair value gaps. And so prices getting weaker and weaker. You know what I'm saying? Like, look at each PD array for what job it's supposed to be doing, And then, that's that, like, so don't look at order blocks for a like trade into an order block as a shift in sentiment or break market structure shift or nothing like that. Look at the, saying, we're looking at the lows for like market structure breaks and stuff like that right there.
Yeah, so I was trying to look I was just trying to see where the market would break structure if it did come down. So when it went up, I wasn't considering the order block to be I considered it, like you said, a market structure shift at first, because I wasn't thinking that it was a part of the leg that sent it higher. I was thinking that it was the lower area, like from 930. I was seeing it all as one. So I just wanted to know if that was right or not. Because um another thing, like looking at divergence, how you mentioned it, like price traded down to the 10 o'clock order block and then pushed higher to the next order block. Like the NQ and the YM, those two, they took out the high, like the 1125. Yeah, they took out that high, but this one didn't. So I wanted to know, like, I wanted to know how to use that because I was just confused. I would think that if it took out the high and then it came down, then it would be considered a break in market structure. But in this case, like the way I seen it, it was a market structure shift unless it took out the 930 low. But I don't know if I'm thinking like too deep about it.
Why is this not showing up? Oh, I hit the wrong thing. I'm tripping. Okay, so we got divergence here. That's where you talking about right now, how we took that high on the NQ.
Yeah, and the YM
take,
did the same thing.
Yeah, so the NQ, you said the NQ and the YM took that high.
Yeah.
Right? So, again, the way that I use divergence is if I'm anticipating price to if I'm anticipating price to go a direction, right? If I see if I'm anticipating lower prices and then I see the bearish divergence, then that helps me trust the idea of lower prices, right? It don't matter which one creates the divergence. It plays more, it gives me a little bit more confidence if the one I'm looking at is showing the weakness, because if the one that I'm looking at is showing the weakness, I'm like, okay, yes, it is weak and I'm looking to short this, right? So that's how I use the divergence. I don't use it as like, oh, we got divergence, we got to go down. No, I have to already be anticipating price to go down and then see the bearish divergence, and then I'm like, okay, I can trust the bearish thesis now, and then it just heightens it when I'm expecting lower prices, and then the indice that I'm looking at is showing to be the weaker one. And then as you see here in this case, right, the ES ended up selling off a little bit deeper than the NQ, because the ES came all the way down here and took out this low, but the NQ didn't, right? So it was like a deeper pullback on this one here. That's how I use the divergence. I know. I think you had asked how do you use it? But
Yeah.
that's how
So in this case, because two of them went up and then the one went down, that's bearish, right?
At the highs, divergence at the highs. Yeah, divergence at the highs is bearish divergence. It don't matter if two of them went up and one went down, or one went up and two went down, but it's just divergence at the highs. If all three of them not doing the same thing at the highs, that's bearish divergence. If all three of them not doing the same thing at the lows, that's bullish divergence.
Okay.
And then the bullish divergence and the bearish divergence, I only look at it if I'm already anticipating it to do something. And if you notice, where are we on the ES right here? Can you see what that says right there?
New week opening gap.
Yes.
Okay.
right? And where are we in this is a what in reference to where price is coming, the price is coming up to it. So this is what kind of PDA rate?
Like an
Price.
ARP, like a high time
I'm
frame
just,
ARP.
but I'm just saying, like it's if price is trading up to it, that means it's what kind of PDA rate? If we're trading up to it,
Bullish.
no.
Oh, you mean when you
Premium.
say,
Premium.
Oh,
See what I'm saying? Because
okay.
you're trading up to it. It's above price, right? It's above price. We're trading up to it. So we've come to a higher time frame premium PD array, right? You're bearish, right? You come to a premium PD array, right? Your sentiment is bearish, right? And then you get bearish divergence. You see what I'm saying? You see, it's like it's layering effect, right? So you're just not just looking at bearish divergence anywhere. We're getting bearish divergence at a premium anticipatory reactionary point. You see what I'm saying? We're at a premium anticipatory reactionary point, and then we get bearish divergence, right? So once we get that bearish divergence, then now you can start to trust your bearish sentiment a little bit more. You can start to trust your bearish sentiment a little bit more. And depending on how aggressive you are, right, on this 5 minute time frame, right, we trade below a short-term low right there, create a fair value gap right there, and we trade back up into it, right? If you're aggressive, that's a shorting opportunity, right? We get a market structure shift right here, right? Remember when I said how you can trust market structure shifts over breaking market structure? Well, not over, but you can lean into trusting the market structure shift, right? One of the ways was if we had bearish divergence above it. You see what I'm saying? So now, because right here we form a mitigation block, right? But if we would have taken out that high, we would form a breaker there. Now, when I talk about when to trust a mitigation block or when to trust a market structure shift, if we had bearish divergence at a higher time frame anticipatory reactionary point, right? So there's opportunity to short if you're aggressive, right? We come down here. A lot of people call this a break in market structure. I call it a shift in sentiment because that low didn't take out that high, but we come down, right? We come down there, and then once we get the break in market structure, right, we trade back up into the fair value gap in this price leg down right there. So this price leg there, right, is what gave us our break in market structure. And on this price leg here, we came to external liquidity, traded back to internal liquidity, right, to continue down. Did I lose you anywhere? Were you tracking?
no, I'm tracking.
Yeah. So
I think I was overthinking it kind of, but like
yeah,
this
yeah,
this is more in depth, but it put it all together.
yeah, yeah, yeah. And that's why I say, look, when you said you were looking at trading into this order block as a market structure shift, that's why I was like, don't look at order blocks like that. Look for your market structure shifts at when you're taking out lows, right? And when you're taking out lows, look for market structure shift there. With your order blocks, you want to look at them for other reasons, like you know what I'm saying, like what order blocks is like, you know what I'm saying, is it are we still accumulating longs? Are we still accumulating shorts? Are we, you know what I'm saying, that's the stuff you're looking for at the order blocks. Are we reclaiming an order block to continue down or continue up? You know, you look at it for stuff like that. But when it comes to market structure shift, you want to focus on, are we taking lows? Are we taking highs? Do we have bearish divergence? Do we have bullish divergence? What, you know what I'm saying, what's going on? That's what you're looking at when it comes to market structure shift and stuff like that.
Okay, I think another problem that I had is just like when it came to that breaking market structure and when there's multiple legs in one I don't know what it's called. Like you know what I mean? Like multiple, like in this case from 9:30 to the top there's two legs in that,
Yeah.
right?
When
So
one dealing range got multiple price legs, that start messing you up. That's what you're saying?
yeah, so the way I like um thought about it is if it's only one down close candle, then that's still a part of the dealing range. Like it's not a separate dealing range. But if it's multiple down close candles, then it's a new dealing range. If
Just
that makes
like the, well,
okay.
and this is what you want to look at, right? From that high down to
Yeah.
this low right here, that's one complete dealing range right there. Right. This is how you want to look at your. This is how you separate your dealing range from your price legs. Right. This is how you
Okay.
separate your dealing range from your price legs. Okay. So your dealing range is gonna take out liquidity on both ends of it. Right. You're taking out liquidity on both ends of it. Right. So this high right here, we traded up above some liquidity. Right. And this low right here, we traded below some liquidity. You see what I'm saying? So we coming from here, right, where we took out some liquidity, right? We come from there where we took out some liquidity, and we traded all the way up here where we took out some liquidity, right? So you got this whole dealing range right there. That's your dealing range that you're in, okay? And then we got this, right? We got a price leg inside there, right? Got one inside there, all the way up to there, right? Now let me take this big dealing range line off there, okay? So, right, so we came from here all the way up to there, right? Because we took out some liquidity there, then we went all the way up taking out liquidity. So throughout there, we got price legs all inside the dealing range. So we got one here, right there. So when we're coming back down here like this right here, right now we got separate price legs, right, coming down, right? We're coming down, making all these separate price legs there until we get all the way down here and trade below that right there. So now we got ourselves a new dealing range over here, right? Now that's a new dealing range there, but inside that dealing range, we got all these little price legs right here. You follow what I'm saying?
Yeah.
And then, so it don't matter how many down close candles it is. It just matters, have you traded out both ends of a dealing range? If you've traded out both ends of a dealing range, now you've created a new dealing range, right? But if you haven't traded outside of both ends of a dealing range, you've just created a price leg, an impulse leg, or whatever you want to call it, right? Whatever you want to call it.
So how do I know to use the price? Like, how do I know to use that with the breaking market structure? Because I'm seeing it as the dealing range has external liquidity on both ends, and then the price legs are internal.
That's what I'm saying. Remember when I said, what are you comparing it to? Because I like you on a 5-minute time frame. That's really
Oh.
zoomed in. What are you comparing it to? That's why I say what did we come to here? We came to a higher time frame, anticipatory reactionary point. So this dealing range there, right, from this low to this high, we've come into a higher time frame, anticipatory reactionary point, right? So now when we get here, we're anticipating price to possibly reverse, right? And so since we're at this area where we're anticipating price to possibly reverse, now we can come in and start to trust these lower time frame breaks in market structures to support our narrative of coming back down to that low right there. Because we're not basing it off what this 5-minute is doing. We're basing it off the fact that we came to a higher time frame point that should push price lower. And now that we're on this high, and we're at this higher time frame point, right? If you was trading off the higher time frame, you would just get short as soon as we trade into that. Remember how I always talk about if you trade based off the higher time frame, you just get short as soon as you touch that anticipatory reactionary point. Set your stop based off the higher time frame. But the way I trade it is when I get there, when I get to my let's go to an hourly time frame, right? We're gonna put a line here. We're gonna put a line at the top of that right there, and then we know the low of the thing there. So let's go to a 60-minute time frame, because that's 2 time frames from the 5-minute, right? And as you see on the 60-minute here, we have a 60-minute bearish fair value gap right there, right? So we're coming into a 60-minute bearish fair value gap. This fair value gap's job is to push price down. on the 60-minute, right? So on a 60-minute time frame, that's 2 time frames apart. Remember I told you daily, 1 hour, 5 minute, right? Those are your 3 time frames, right?
Yeah, that's what
And
I
so
use.
now looking at this, we have this huge dealing range right here, right? Coming from all the way up there, all the way down to here, right? We got this huge dealing range. That's our dealing range, right? So now, as we coming down in this dealing range, right? What is price showing us, right? We offer buy side and sell side delivery, and then we leave that area, right? When we leave that area, price comes back there, and then it displaces away, showing you on this hourly time frame, I'm done with this area, right? We created a balanced price range, we left it, and then we traded back into that imbalance, and we displaced away again. So now price is showing you for this dealing range, I'm done with this portion of it for now, right? So now that's when you bring your focus to, right, this portion of it, right? Because this move here showed you that price is done with that. This is the entire dealing range, right? But this move here showed you that price is done with this portion there, right? Because we treating all this as a balanced price range, right? We got all this back and forth delivery, right? And if we continue to look from where price traded back up into it and go over, you can see that all of this has been efficiently delivered, right? So you can see that price is done with that right now for the time being, right? So we're not anticipating price to go back up there anymore, right? We're anticipating that this high should be safe, right? We're anticipating that that high should be safe, right? Because it's up there inside the balanced price range. Now, that's from on our 60-minute. Now, since we're anticipating that that high should be safe, right? We have come down, created 2 SIBIs, right? We came down, created a SIBI here, came down, created a SIBI there, traded back up into this SIBI, right? And then dropped down again, right? Now that we drop down again, right? We've already traded up into this SIBI, right? And, you know, it's been redelivered to. Remember, Michael said, don't be talking about mitigated there ain't no such thing, right? So we redelivered to that SIBI and then drop down. So now when we come back up, we've already traded back into this SIBI, right? So we're not looking to try to short off this SIBI again. It could, but we looking for the one that hasn't been delivered to in the premium of the move, right? So here's a 60-minute fair value gap in the premium of the move that hasn't been delivered to, and it's in confluence with a new week opening gap, right? And is right there with a bearish mitigation block, right? So you got all this confluence there, right? And as you see, when price comes back to, price has gotten into your 60-minute ARP, right? Right? This is your structured time frame, right? Remember, 60 minutes is your structured time frame. So now when price, as soon as price trades into this 60-minute fair value gap, we're going to put a line right here, right? And everything to the right of that line, we're looking for everything to the right of this line, because that's when we went into that area on the 1 hour time frame. So now we're looking at your entry time frame, right? So we drop to the 5 minute as soon as we trade into this hourly anticipatory reactionary point, right? This is a bearish fair value gap. We're looking for a reason for price to go down. So coming in right here at 10:05 is when we drop down and start watching it on the 5 minute time frame, because we just came into your hourly anticipatory reactionary point, right? This is when, as soon as price hits it, right there, boom, price hit it. Now we're dropping down and we're watching it, right? What are we watching for? We're watching for some type of indication that we use in our trading to enter short, right? So we come here, we pushing up, we pushing up, pushing up, right? We get to, right, a weekly, we got a new week opening gap, which is a higher time frame anticipatory reactionary point that's right there at consequent encroachment of our hourly, right? And then we trade up. We know this right here was a mitigation, the wick of a mitigation block. We talked about that, over there. It was a wick of a mitigation block. We also came back to this area of consolidation. So that's a balanced price range there because we consolidated and we left that area, right? Traded back up to that balanced price range on this 5-minute time frame. And then we displaced away. Boom. Right? We displaced away, but we didn't take out the low, right? We didn't take out the low. So we like, okay, we displaced away, but we didn't take out the low, right? Why are we looking to take out that low? Because this low came up and took out a high, right? So we're looking for it to trade back down through there to give us an indication like, okay, it's ready to turn around, right? Didn't take out the low. Come down to the order block, come back up, right? Stop again at the weekly PD array. And then now we get the divergence that we was talking about. Okay, we get divergence and we displace away again, right? We displace away again, and then when we get this divergence after displacing away again, okay, now we see that we are, we've taken out a short-term low, right? We've taken out a short-term low. We've created a fair value gap. We got bearish divergence, right? So if you're aggressive, that could be a short there, right? Because when did I say you could trust mitigation blocks, right? When we got divergence, right? We got a bearish mitigation block right here, right? With the divergence from the other indices and a fair value gap. We got a mitigation block and a fair value gap. And on top of that, right, we got an inversion fair value gap all right there, right? And then if you say, okay, Tim, that's not clear enough for me, I don't trust that, I couldn't trust that, whatever, right? Okay, so then once we do that there, we're right here at this mitigation block, right? But not only are we God dog it, get on the thing. Okay, so we have this mitigation block right there, right? But not only are we at the mitigation block, we got the fair value gap, right? And not only do we have the fair value gap, right? We got a bearish order block that we're trading up into the wick. The wick is overlapping with the imbalance. So we're consolidating right here, right? When we consolidate, what do we say we're what are we doing? We consolidating. We're accumulating positions, right? Where are we accumulating these positions? Remember when I told you to focus on what at the order blocks? Are we accumulating positions at an order block? So we're right there at this order block wick right there. Now, if you wanna really dig into the weeds, right? Price right here was going up, right? Hit an area, right? And then we had a shift in sentiment, meaning coming the other way. And then we went back up right there. So, right, this here is the last up close candle in this up move. So if you want to pick straws, right, that right there can be looked at as a order block right there. That's the beefiest last up close candle in this up move right here. And we're accumulating there. So you can look at that as accumulating orders inside that order block right there. You see what I'm saying? So we're just accumulating orders inside an order block right there. And then we displace away. And this time when we displace away, right? This time we displace away, we keep going all the way down and get that break in market structure. So there's your 5-minute break in market structure right there after trading into your 60-minute anticipatory reactionary point, and then you retrace back up into your imbalance, into your bearish order block, right? Into your bearish mitigation block, you know what I'm saying? And then price goes down, right? And this is how I look for the entry on my entry time frame, but you could just go short at your structure time frame, but you have to manage it based off your, you know what I'm saying, your structure time frame structure, if that makes sense.
Yeah, it does. So it makes me feel good because on the hourly, how you analyze it, that's exactly the same thing that I thought. Like it made the BPR and moved away, and then now we're looking at the shorter range. So it's good that I'm on the right track there. It's just I think when I got to this 5 minute, I kept going back to the pattern mindset because of the whole dealing range versus price select thing. So I just in my head I always had it as if it's like one candle, it's not a new it's a price select, but it doesn't change the dealing range. So I just kept going back to that. So
Yeah,
I'm gonna have to rewatch this video, but it was very helpful. Thank you.
yeah, yeah. And like I always say, just always don't get too zoomed in. I get zoomed in a lot, and I have to say Tim back up. You know what I'm saying? That's why I keep my higher time frame PD arrays on the chart, right? I'll be like, am I inside an anticipatory reactionary point? If I'm not inside an anticipatory reactionary point, right, then I'm not trying to change nothing. I ain't trying to force nothing. I ain't trying to do nothing. I'm just waiting until I get to that point where it should be doing something because the higher time frame is going to rule. And when you got an hourly that's overlapping with a weekly, right? And you see that divergence and you start seeing those shifts in structure, then you can trust this 5 minute because you're going off of what the higher time frame is saying. You can trust a 1 minute. You can trust a matter of fact, let's look at this same area here, this same little area price on the 1 minute. We're gonna look at from this high all the way over to this low, because that's was when it retraced, and that was the real 5 minute entry right there. I'm just gonna make this blue. Right. Then we're gonna go down to a 1 minute and see what that look like on the 1 minute. Right, so here's that area on the 1 minute right there. Right, so on the 1 minute here, we see we dropped down, came down, and we got an imbalance and an order block there. We pushed back up, came back up to a 1 minute imbalance up there, right around the same consequent encroachment that we talked about, and then we dropped down here, right? We got a clean breaking structure there on the 1 minute, right? Because that low came up, took out that high, then that low came up and took out that high, and then here, right, we broke below that low there. Got a clean breaking market structure there.
So
Taking out
there, that first, is it the first or the second low you said is breaking structure?
both of them. Because
Okay,
this low took out a high and this low took out a
took
high.
out a high.
Right?
Okay,
So you got a bearish breaker there and you got a bearish breaker here. So both of them took high. You see what I'm saying? So
yeah,
it's like when you come down below there, that's a breaking market structure right there, the way I look at it, right? Because this low went up and took out that high. So when I come back down, I got a bearish breaker right there, right?
okay. So you wouldn't count. You see, in between, that low and the high that was taken out, there's another order block. You don't. That would be a structure shift, or you're not even looking at that.
Talk about right here.
Yeah, there.
Yeah, I ain't even looking at that, but technically that right there is a breaking structure there because we got like this little area consolidation went up and took out this high, and then we traded back down below it. So
But
technically
it's not
that's
significant enough,
yeah. I'm
right?
not looking at it because it's like we like this here. I'm just looking at that as like some consolidation inside there because we didn't really pull back. We just like
Okay.
range there. You see what I'm saying? It's like I'm looking at
Yeah.
like the move, right? We didn't make a distinguishing low right there. Right. If we zoom this in right here, see how we didn't make like a distinguishing swing low right there. We just went, these are like equal bodies. We went up, paused a little bit, went up, right? So I'm just looking from like the swing low to the swing high right there. Right. So I'm not trying to zoom in on every little move. I'm following the money. I'm looking at what, what I'm saying, what is the money doing? I'm looking for when the price is really pushing away, when it's expanding. I'm looking at those expansion legs, them displacement legs. That's what I'm looking at.
Okay, I got it.
Right, and then you see at that first breaking structure right there, how price, the bodies of the candle, all the bodies of the candles respecting that first breaking structure right there, all of them respecting that lower breaker, right? Because you got two breakers here, but like the candle, all of them, they're respecting this bottom breaker right there. Like if we highlight that bottom breaker right there, right, everything is respecting. Let me change that color on that. Right? everything is respecting that bottom breaker, right? We got one breaker here and we got one breaker there, but everything is respecting that breaker, even though we're coming up into this inefficiency, coming up into the wick of this breaker right here. All the bodies of the candles are staying inside that breaker right there, right? And then not only are we inside that breaker right there, right? If you look here, right, all these are consecutive up close candles, right? So that's what is that right there? Them consecutive up close candles. What is that?
An order block?
A order block. And where are we accumulating these orders at? Right there at that order block.
At the order block, yeah.
Order block job is to block price. Block price. And and smart money, they use them order blocks to accumulate their positions, right? Because remember, we talk about a sense of a market maker sell model, right? When we come back up into an order block, what do? We reclaim the order block. You see what I'm saying? So it's like you're accumulating short positions because a bearish order block is meant to sell, right? So when you come back up into that bearish order block, right, on the opposite side, you reclaim that and you accumulate more short positions. But that, you know what I'm saying, that's like stacks on stacks on stacks thinking, but we sprinting now, so that's where we at. And always remember what I tell you, your 3 time frames, your daily, your 15 minute, your daily, your hour, your 5, right? So focus on those time frames. Your daily, that's your narrative time frame. Your hourly, that's your structure time frame. So when your 5 minute trades into an hourly structure, PD array structure, that's when you want to go into your 5 minute looking for PD arrays to trade off of, right? But you don't just trade off anything. You want it to support whatever you want price to show you. This is what I want to do, right? You want price to show you this is what I want to do. And like on this 1 minute right here, right? Just looking at this 1 minute trading up into this hourly area there, right? We come back down, right? We don't take out that low there, right? Because that's the start of the run there, right? We don't take out that low, so we like, okay, right, what are we gonna do, right? And then once we come up here and we know this is when we got our divergence, right? Now we got our divergence. Now we come down and get the breaking market structure there. Now we can trust getting short over here off of this 1 minute time frame, because we've traded into an hourly anticipatory reactionary point, right? We got bearish divergence, and then we got a bearish breaking market structure on the 1 minute. So now we can trust this 1 minute breaking market structure, because on the hourly we are at a hourly anticipatory reactionary point, and then we got bearish divergence across the indices, and this one is showing the weakness. Follow me?
Yeah, I am.
Yeah. I'm not trusting that just because it's a 1 minute breaking market structure. I'm trusting it because this, and this. And then that's the way you got to look at it. And same thing on the 5. I'm just looking at the 1 minute right now, but your entry time frame is the 5 minute. So same thing on the 5 minute. I'm trusting this 5 minute breaking market structure because we came here on the hourly. We got this. In this case, we got bearish divergence. But if we didn't have even if we had bearish divergence and this one made a higher high, right? When we come back down, we got bearish divergence. Now we've created a bearish breaker. That high should be safe. You see what I'm saying? Like that. Or in this case, we got bearish divergence. We got bearish divergence. Now we got a bearish breaker here, right? That high should be safe. In turn, this high should be safe because we got the breaker, right? If you know what I'm saying, so like now you're seeing more and more. This high should be safe because we got bearish divergence. That high should be safe because we got a bearish breaker. You know what I'm saying? Then if you still feel like, oh, I still can't trust it, we come over here again, trade back up. that high should be safe because we got a balanced price range and we left that area. We shouldn't come back above there. It's like you keep going, but after a while, you're going to be chasing price. At some point, you got to push the button. You know what I'm saying? At some point, you got to push the button because, you know, you can keep not trusting it, but at some point, you got to push the button. And if you wait too long, then you get your head bust and be like, oh, this stuff don't work.
Exactly. And I think since you told me about the 3 time frame or that video from, or I guess that live stream from 2 weeks ago, I think I've had the most clarity when it comes to studying and reading price. So all of that and combined like with these Q&As have been very, very helpful. Thank you.
Well, I'm glad it's been helping you. Look at that. This stuff really works. Ain't that right, Lump? This stuff really works.
If somebody on the internet charging $99.99,
hey, what else? Y'all give it up for Kashaya pulling up with the hard-hitting questions, man. This kind of stuff right here help everybody out. I appreciate you for asking the question because this kind of stuff helps everybody out. Anybody else got anything? I'm getting a wee bit hungry, but if you got something, I'm here. My wife went to yoga. My son at work, so I don't have a vehicle to drive. My other son probably sleeping. Even if he wasn't, he don't come out his room unless he got to poop or get something to drink. So I'm here. All hearts and mind clear. Ain't nobody got nothing. Check YouTube. I don't see no comments on YouTube. We've been on here forever, over 2 hours. I'm surprised anybody's still on here. All right. Nobody got nothing in Discord. Nobody got nothing on YouTube. I appreciate y'all, man. We're going to go ahead and call it. Yeah. What's Monday? Mentees. I'll see y'all Monday for the live tape reading stream at 9. Live tape reading stream at 9 on Monday. Everybody else, enjoy the rest of your weekend. Hopefully you got something out of it. Again, this was the intraday price action recap for the weekly. Tried my best to give, a little bit more insight on looking at price because we sprinting now. It's not just about, hey, this what price did on the week. We want to look at why did price do that on the week? What clues did it give me, right? What clues did I see correctly? What clues did I miss? You know what I'm saying? What I did right, what I could have learned more from. You know what I'm saying? The stuff you don't quite get right, I think those are the best teaching lessons if you understand how to go back and look through the price. Sometimes I get long-winded. I jalapize. It ain't no way to teach this stuff simply. If it was simple and easy, everybody would be doing it and everybody would be billionaires. Everybody would be driving ugly Tesla trucks and racing Lamborghinis and Hellcats down 185. Hey, man, that's it. I appreciate y'all for tuning in. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's been your boy, Aranya Grande. That big spot if you don't upload Espanol. Y'all be safe out here in these trading streets, man. Gone.